So, David, so many markets as we see there close to or in correction territory. What's the path of least resistance for equities in the region now?
I think right now all eyes are certainly on the Fed in terms of what the Fed will announce tomorrow, and whether that's going to be perhaps a faster withdrawal of liquidity into the market, and what the implications mean for Asian markets and emerging markets in general. I think we're a lot more constructive on Chinese equities, especially since they have a much lower easier base to come back from, and also because the Chinese central bank is taking a different approach and easing liquidity to the market that I think should help risk assets.
Now, you like China at the moment, so how confident are you that the bottom is in that market, and that regulatory troubles around tech, contagion issues around property, that all of that is now contained?
I don't think we're out of the regulatory woods yet for the technology sector, and I think that the property market could potentially still see a bit of downside, but I think that green shoots are sprouting in terms of greater monetary easing, and they should take perhaps a couple of quarters for this mid-cycle slowdown in China to bounce back. We see GDP rising and corporate earnings to grow more strongly in the second half this year.
We have seen some bullish energy calls in the past with, of course, the commodity space really rallying the past year. Can we continue to see some gains in this sector?
We've been pretty bullish and positive on commodities and energy for most of last year, and continue to do so, taking the foot off a little bit on the gas pedal right now. But I think with some of the geopolitical tensions in Ukraine and the Russian border, I think that it makes sense to continue to be exposed to energy.
We are seeing really massive volatility across markets, not only here in the U.S., but across Asia as well. How do you take advantage of those price swings, and how do you position?
We've seen in the U.S. these market sell downs in the past 22 months, and I think that each of those times stocks have rebounded in the U.S., and I think that this could be another one of these times. Investors certainly need a little more clarity as to when the first rate is going to happen, and I think that the Fed is going to be a lot more slow in terms of its rate hikes and liquidity withdrawal, and I think that certainty will give a boost to U.S. stocks.
We had seen some concerns of potentially a sharp monetary tightening coming from central banks could cause a growth shock and really hurt equities. Take a listen to what Goldman Sachs' Peter Oppenheimer had to say earlier.
The key thing for equities from here, though, is how much any of this shift upwards in interest rate expectations and indeed in financial conditions will hit growth, because that's going to be the key determinant of where equity markets stabilize.
So rate expectations, not to mention the financial conditions tightening, is not a concern to you at this point?
Well, I don't think that it's the first rate hike that will be that big of a difference for equity markets. It's certainly perhaps the last rate hike that will determine whether there's been a policy mistake or not, and whether that ends the business cycle or not. And so I think we take a quite sanguine view about heading into this first rate hike, and I think that the Fed will exercise caution and be conservative in terms of withdrawing liquidity from the market this year.
When you look at the wild action that we've seen in U.S. equities, particularly over the past 2 days, how do you think the market is doing in terms of pricing in the path of Fed tightening?
Well, I think that market is currently pricing in significant amounts of uncertainty. If you look at the VIX volatility index, it's above 30, the highest it's been in 6 months. And I think that investors are all over the place in terms of expecting up to 8 rate hikes a year, or a complete withdrawal of liquidity through quantitative easing. I don't think that's going to happen. I think that it will be a much more measured pace, and I think that stocks should rebound once there's more clarity in terms of the first rate hike. And although there's still going to be, I think, a bit of volatility from now until March.